All right, welcome back to the channel. Today we're going to be checking out Fortinet, ticker symbol FTNT. So let's dive on into it. All right, so looking at the 5-year chart, because you got to just start with the 5-year chart. That's all you need. We see Fortinet's kind of been shopping around over the last around 2 years now. Let's see, 2022 high was about 73. We're sitting at about, $58.39 right now. On a 5-year basis, it has averaged around 32% CAGR, total return about 308% if these numbers are correct, while the SPY has done about 12.93% CAGR. And the SPY return has been about 83.69% off of these calculations. So if we look at Fortinet compared to like a competitor like Palo Alto, PANW ticker, has they've kind of actually merged here on the 5-year. They're coming together. All things are aligning and they're coming together on the 5-year. Wow. So recently Palo Alto has been doing a lot better as far as price action. And that is backed by, fundamentals and how they've performed over the last year. In their various earnings calls, they have seen a lower slowdown than Fortinet, and they're probably positioned better going forward in the intermediate to mediate term. They're priced higher probably because they have a better product line. I think they have a better product line. So they're kind of the higher quality player. On the 1-year basis, we can see that Palo Alto has absolutely crushed Fortinet. 110% for Palo Alto on the 1 year and 19.92% for Fortinet on the 1 year. So pretty big deviation there between these two competitors. Now, going into some of the growth rates, Fortinet has a 5-year top line growth rate of about 24%. Net income has grown drastically at 93%, EBIT 50%, free cash flow 25%, operating cash flow 23%, and they've seen a reduction in shares. So bottom line growing, top line growing. They've had some margin expansion, and they've been buying back shares. So that's kind of the brief overview on some of the chart and some of the, valuation multiples that they've gone or growth multiples that they've gone. Let's go check out their investor presentation though. All right, so here we have the investor presentation for November 2023. Let's breeze through it and see what we can find. All right, so this is kind of going over their their tech stack from the security perspective. They're most well known for secure networking, but they've been making small acquisitions and developing products across more of the full cybersecurity suite. So we've got secure networking, converge, security operations, consolidate, universal SaaS, consume. And we can see some of the things they point out is AI-driven technologies, cloud-based, FortiPoints, FortiGuard Labs, OT-aware ecosystem. So they're kind of like pitching this as an entire ecosystem, and we'll get into that a little bit later as well, as far as what I think could be potential tailwinds and potential advantages to companies that are doing more DPI-based network intelligence and how they can react compared to other security platforms that are more endpoint protection based. So one platform, integrated operating system, they basically have, I think it's called the FortiOS, and they basically take that FortiOS, that operating system, and they run it across multiple platforms to keep some type of similarity across the various platforms, various security offerings that they offer. So we got the FortiGate firewall, FortiSwitch, FortiAP, FortiExtender for 5G, FortiNAC, FortiAI Ops, plus more. You got security operations, SIEM, SOAR, EDR, XDR, NDR, Mail, FortiSandbox, FortiRecon. It's crazy. The breadth of like products that can be offered in a security platform is pretty insane. I went through their offerings for various products, security products, and I think there's like 70. It was wild. So SaaS, SD-WAN, ZTNA, FortiSaaS, FortiWeb, FortiGate, CNF, VM. Basically a lot of different offerings. And kind of what they're pitching is like their ability to offer all of these, but then consolidate them into like a singular platform, singular operations control center, a singular system, singular like pane of glass to view the entire ecosystem. $38 billion market cap, so it bounced back a little bit, I guess. I think it's about $46 billion right now. Investment grade, triple B plus. Let's see, 2023 revenue estimates, 20% year over year, which this is kind of interesting because we want to look at 2024 because they're projecting a slowdown in 2024, and with Fortinet and Palo Alto, you have to be aware of kind of their deferred revenue pipeline, as far as the products that they've sold. Kind of, I can't remember the exact term for it now, but basically what they have in their pipeline for sales, their hardware sales and their service sales as well, or their recurring subscription sales. So hardware sales, a decline in hardware sales can be a leading indicator to eventually like a slowdown in software subscription or software sales. So 27% operating margin. Okay, that's all good. Let's see, consistent execution, rule of 40. Okay, cool. Let's see, Google Cloud partnership. Global SaaS points of presence with Google Cloud. So that's like a Google Cloud partnership. That's, I don't know. I don't know if that's super bullish. It's more that they're just going to utilize Google Cloud for their SaaS points of presence. So that's just like the, I don't know, the not cross connect, but the POP provider that they're going to be using is Google Cloud. So it's not like Google is buying all of this stuff from Fortinet. It's more Fortinet consuming Google. I'm going to breeze through this, see if I find anything that's particularly of interest to me. All right, so here they're just kind of really pointing out the security landscape, users, devices, networks, applications. But they kind of get into some interesting information as far as time to detection and remediation of a security breach. Usually 21 days, if at all, for a time detection. That's pretty bad. Then 12 hours contain, 6 hours to investigate, and 12 hours to remediate. So some specs as far as how much these security breaches usually cost. And I would say in certain cases, this could be probably on the really low side. And that kind of leads to a growing TAM, growing total addressable market for these different offerings. So it's interesting. Secure networking has the kind of like the biggest piece of the pie, but security operations and universal SASE is most likely going to be growing at a much higher rate. Yeah. So 9%, 14%, 20%. So, and we can see that with their projections into 2027, that secure networking is going to grow obviously at a lower rate than universal SASE and security operations. Really what I'm looking for is the ability for a security provider to offer lots of different products and consolidate them in a super efficient manner and an easy manner for companies to consume and report on, especially when it looks at their like reporting or their SIEM systems, their reporting systems, their response systems. The more data that you can collect from various points, probably, in my opinion, the more of an edge that you'll probably have to be able to get a full picture of the attack that's going on, or the breach that's happening. So it's secure networking is lower, but it's potentially one of the areas that could have the most impact if specifically if they're able to develop DPI technology enough to be able to do kind of inline threat mitigation, endpoint protection, and threat hunting and response. So that's where I get really interested in, but I would say that the security operations side and the universal SASE side is probably going to be the highest growing. I totally agree with this. Secure networking has been around forever. It's just how they develop going forward. I think if they can develop it correctly, depending on what type of processing ASICs they have and DPI technology they have, they might be able to offer more value, but security operations technology and SASE is probably going to be easier to sell, I'm guessing. And here we can have an interesting slide showing kind of how fragmented the sector is. So we've got Palo Alto, number one, Fortinet, number two, and then we got Splunk, Gen Digital, CrowdStrike, Checkpoint, all the way down. And you can see some of these have pretty high growth rates, but they're pretty small. Fortinet and Palo Alto have fairly similar growth rates, but Fortinet has focused a little bit more on profitability. You could argue that Palo Alto definitely has better product lines, and but as we'll see, Fortinet has done a lot of their growth organically as well. So it's kind of interesting. And then here we can see their segment breakdown of products. Secure networking counts for 70%, security operations 10%, and universal SASE 20%. So networking is definitely, or secure networking is definitely the largest part of the business, as expected. But these other two areas, if they can get some winners in there, pretty good potential for really good growth in that area. Now, they did point this out, which I think is interesting, and I definitely agree with how secure networking will be larger than just like, I don't know, traditional networking by 2030. I think as time goes by, we're going to see secure networking kind of spread into the larger areas of network infrastructure. And their security footprint is basically going to spread further down in different areas, further towards the endpoints. So FortiOS everywhere, enterprise networking, secure networking, cybersecurity services. They're really pitching the, like, I don't know, not the all-in-one, but they're pitching basically a environment where they're going to have all of these basically product offerings for the entire cybersecurity stack. And they're going to be able to leverage those to make decisions better, faster, and create a more secured overall environment. And then they do mention AI quite a bit, especially with their FortiSOAR platform. But this is kind of a good holistic view of kind of what they're going for. Security operations, AI-powered solution to detect, disrupt, investigate, and remediate. And they're able to get data from basically multiple security appliances or security platforms that they can basically tee that traffic or analyze that traffic off to. So you have FortiSIEM, FortiAnalyzer, FortiWeb, Threat Analytics, FortiNDR, Sandbox, XDR, FortiRecon. So yeah, you'll see them mention AI quite a bit, and AI is definitely actually going to be a real large part, I believe, of security solutions going forward, especially when it comes to gathering the data, analyzing the data, and reacting off the data. So it can be quite a big, job to essentially mesh all of these different cybersecurity products together in order to investigate quickly and remediate quickly. So, and then I think we pretty much get down to their financials. So let's go ahead and jump into the evaluation spreadsheet. All right, so let's skim through this really quick. I mean, as we can see, charts are going up and to the right, yay. So revenue increasing, basically everything increasing. Fortinet has actually done a pretty good job of balancing growth and profitability too. As we can see, or previously, I think they're growing at about a rate of 24% over the last 5 years. Really good EPS growth, which shares outstanding has been declining as they've done kind of spontaneous, like sporadic buybacks. Go to their balance sheet. Let's check that out. And we got a little bit of debt. Yeah, a little bit of debt, about $1 billion in debt. Their cash assets are around $3 billion, so really nothing to worry about there, assuming these numbers are correct. We do see a little bit of increase in goodwill and intangible assets. They have done some small acquisitions here and there, but it hasn't been nearly as bad as nearly as much as, say, like a Palo Alto. Palo Alto has, I think they've done about $4 billion in acquisitions over the last 5 years. And you can see that reflected in their goodwill for Palo Alto. For Fortinet, they've done, maybe $150 million or so. And Palo Alto has had more dilution because of the acquisitions. Fortinet has less dilution because that they've had less acquisitions. So Fortinet's almost like grown at the same rate as Palo Alto, but they've done it more organically, which I tend to like. And you can see, if you listen to the management's calls, you can tell that they're kind of against doing like serial acquisitions for the sake of acquisitions. They'd rather develop in-house, which, I'm kind of a fan of that. So going to free cash flow here, we can see same thing up and to the right. Yay. pretty solid financials overall. We can see they have had some common stock repurchases randomly. Recently, I think this last quarter, they had some buybacks hits. Free cash flow, stock-based compensation. SBC is not actually really all that bad compared to their free cash flow. Most of the stock repurchase, or I'll say most of the cash flow return to shareholders, has been in the form of stock repurchases. And it seems like they've done a pretty good job at balancing, like letting their cash grow versus buying back, and buying back at a somewhat decent time. I think you could argue that like right in here, mid 2021 to 2022 was probably a bad time in hindsight to be doing buybacks. If we go back to the overview, we can see that was basically almost at kind of the peak. So yeah, hindsight 2020, probably not the best time to do buybacks. But more recently, they kind of held off on those buybacks the last couple quarters and then resumed. Ratio and metrics, we can see that they've had really good operating margins or gross margins, and that their operating margins and their bottom line margins have continuously expanded. And they are, I believe their goal is operating margins right around 25%. And bottom line margins right around 24 to 25, 23 to 25%. So that's kind of what they're targeting. And from the narratives that I've gathered from management, I think they're going to kind of, I hope that they stay at those operating margins. And if they have an influx, I hope they, put that money to R&D, put it to sales, put it to growth, because they should not be getting too stagnant. They really need to work on developing the company a lot more, especially in an industry that's going to be moving so quickly and has so many tailwinds. They've got a really big opportunity here, and they gotta be able to put some money into R&D, into development, into sales to be really take advantage of the opportunity that I think they're going to have in the cybersecurity market. So enterprise value and market cap, we can see as, we're sitting right around 44 billion, 45 billion market cap and 44 billion enterprise value. It's been, that's crazy. It's been a crazy beast of a growth stock. So now the interesting thing, they've been growing roughly at probably 20%, 32% revenue growth, 28% revenue growth. Man, that's insane. So they've been growing at a decent clip over the last 5 years. It was like 25%, but they're starting to run into a pullback. And I believe, actually go check their estimated 2024 growth. I want to say it was really like a huge pullback relative to what they've done. All right, so we got their latest quarterly report out, or press release, and we can see there was like a decrease in product revenue. Service revenue was still increasing quite a bit. Billings was an increase of only 5.7%, and billings is, I believe, really what you want to look at for kind of a true revenue within that quarter. So the total revenue 16% or 0.1%. But the product revenue, I think, is the thing that's most concerning, is that I think product revenue is probably going to be a leading indicator for a slowdown in service revenue. And if that's the case, then, potentially we see a slowing to maybe a lower single digit, maybe 5 to 10% growth for a bit. However, a large part of their revenue does come from the EU, and we know how great the EU has been doing lately, right? So if the EU was to recover and spending was to open up in that area, which accounts for a large part of their business, it could be potentially a play on recovering, spend within the EU for enterprise security. That could give them a tailwind. So we could potentially be looking at potential like cyclical decline somewhat before they pick back up. Now, the good thing is that service revenue should be pretty stable. It's the one that's growing, and it's the majority of their revenue. So the thing that I do like about Fortinet is that they have really adopted more of a service revenue model. They're getting the product out there, right? They're selling the hardware, but then they're tacking on services that are more of a, monthly subscription, yearly subscription. And that's why they have so much deferred revenue, because if they're selling, 2 years of services, well, they have to defer that revenue until they can actually realize it and they fulfill the obligation of that service over that period of time. So deferred revenue is at about 5.29 billion, which is an increase of 26% compared to 4.19 billion as of last year. So I think we could have potentially like a slowdown in their growth. But even with the cybersecurity industry tailwinds, maybe they slow down to like a 10-15% growth rate for a little bit, but then that could potentially have the optionality to accelerate back into that 20% range. So let's go back over and let's jump ahead. Let's jump into the valuation template. Let me blow this up here a little bit for you guys, because it is quite freaking small. So let's fill this out and see what we get. So I use Financial Modeling Prep for all of the API queries for my spreadsheets, and I do have a referral to Financial Modeling Prep in the description below. It takes about 20% off of the normal pricing. Additionally, if you want access to this valuation template, you can join the Stone Cold Investors Discord, and that link will be in the description below, and the valuation template is available to all supporters of the Discord. You can become a supporter of the Discord by writing 3 different valuation or company write-ups in the Stone Cold Investors Discord, or if you don't want to do any of that and you just want to lurk around, you can sign up for a $5 a month supporter tier, which will give you access to the channel that has the valuation template. All right, so here we can see that the bottom line yields for Fortinet over the last 10 years or so, it's been priced really rich for a pretty long time because of that massive amounts of growth, right? Now we're getting into more reasonable levels. Free cash flow is closer to the risk-free rate. Free cash flow yield is about 4.47%. Risk-free rate right now is around, the 10-year right now is about 4.23. Actually, that's manual, so the 10 year is probably higher. But anyway, it's about 4.23 from my last data input, which needs to be updated. EBIT yield is about 2.78. Net income yield is about 2.49. But we can see that historically it's traded pretty dang rich. So what I'm going to do for this valuation is I'm going to actually use kind of a yield between 3% multiple, 3% yield multiple in the best case scenario, scenario 5, 4.83% in the worst case scenario, scenario 1. Our target's about 20% KGAR. Base KGAR is 17.5% with a 2.5% margin of safety. For dilution, as you can see, they've done a massive amount of buybacks lately. So if we look here, they've done about 5.3% in buybacks over the last year, I believe. And let's see the share count right here. Yeah, so they've done a decent amount of buybacks over the last year. And they've got the cash available to do a pretty large amount of buybacks if the stock remains weak and they think the valuation is good. For the growth multiples, I'm thinking bottom line growth is probably going to be anywhere between 12.88 to 25%. And mostly, bottom line growth previously was 56%, but that was due to a lot of margin expansion on the bottom line. And I don't think they're going to have much more margin expansion going forward. I'm not going to calculate that in. If we look at their margins, we can see that they've expanded to about 22-23% on the net and operating margins, and free cash flow margins is about 40%. So I'm thinking that they're going to moderate and stay right around 25%. That's kind of what management has guided for or given us, as far as I'm aware, as far as what I've heard. Now, because of that, I think it's really going to be just what's their top line growing at and how are they able to maintain those margins. So top line growing pretty much at 12.88% to 24.68%, because I do think we could have a cyclical downturn and then maybe a recovery. Most likely, I think we're going to probably see that growth between the 15 to 20% range. Now, putting all this together, we basically get a current fair value anywhere between like $39 to, I don't know, $50 a share. But because it is a, industry with tons of tailwinds, a high grower, I probably look further out, maybe a forward-looking fair value, which could be about, $53, $60, something like that. So we're close to that right now. The theoretical buy prices for scenario 1 right now for this target KGAR would be $35. Scenario 2 buy price theoretical would be $42. Scenario 3 would be 51, scenario 4 would be 64, scenario 5 would be 82. 5-year targets for these theoretical scenarios would be, scenario 1 would be a 5-year target of $91 per share. Scenario 2 would be $110 per share. Scenario 3 would be $134 per share. Scenario 4 would be $169 per share. And scenario 5 would be a $216. So it looks like it's bounced back a little bit, but low 50s, it definitely looks like it's in a decent place. If you like the company and, wanted to start accumulating a position. So I personally started accumulating a position in the low 50s and kind of hoping for that lower 40 area. I think it's a lot more de-risked there. We'll see what happens. They report earnings I think they just announced that they report earnings like February 7th or sometime in the beginning of February. So we might get, a disappointment and a weak guide for 2024. I would not be surprised at all if we got that. And in that case, I'm just going to be seeing if kind of the thesis continues to line up with maybe having a cyclical pullback, well, not really cyclical, but a weakening in growth due to the EU pulling back on spending. And I'll be really interested to see kind of services adoption, services growth rate compared to product growth rate. But yeah, this is an interesting one because it's getting to the point where it's somewhat reasonably valued and they have enough cash flow to where they can buy back a decent amount of shares. And, if the narrative changes and this Fortinet becomes maybe more respected or more of the preferred player in this space between Fortinet and Palo Alto, then you could see a pretty drastic re-rating there. So it's interesting. It's intriguing. I really like the cybersecurity space in general. I think they're going to have a lot of tailwinds. And yeah, we'll see if they can pull it out. We'll see how they compete with Palo Alto long term. I think a lot of times in industries like this, it can kind of go back and forth where you have one leader for a little bit and then the other kind of, ups its game, starts leading, and then the other ups its game, starts leading. It can go back and forth a bit. But I do think players like Palo Alto and Fortinet that are already kind of like heavily integrated into the network security space have a huge advantage over something that's like just solely endpoint protection or operations, SIEM, analytics, stuff like that. Because I think having those devices in line with the ability to do that DPI inspection and be able to basically take that traffic and analyze it in flow and react to it in flow could be really valuable in the future, assuming the technology progresses enough to where they can do all of that at a rate that doesn't affect performance of normal network traffic. So yeah, that's pretty much what I got for you guys. Hope you have a great week and a great weekend, and we'll talk to you in the next one. As always, I am not a financial advisor, and none of this is financial advice. This is just my musings on another company and another potential valuation. So I hope you enjoyed it. If you did, please hit the like and subscribe button, and we'll see you in the next one.